Welcome, welcome. Sadiq, are you there? Is your mic working? See if you can get your mic working. See if I can get my mic working. Can you hear me? If you guys can hear me, let me know in the chat if you have any questions while we go through the presentation. Just drop them in the chat room. I'll make sure to go over them tonight. We're definitely gonna be going over creating ranges. Uh, okay, cool. We're gonna go over creating ranges using pre-market levels. So the pre-market is very significant when it comes to the regular trading session. And we're going to kind of go over why, what to look for, um, and how to make that work for us. So the strategy that we utilize is the 1 minute multi-day VWAP reversal. So this is a chart, but let's pull up this one. All right. Let's pull up this chart. Let's look at who reported today. So I was watching Disney. Let's take a look at Disney and why Disney was important. So usually I look at the 1 minute, 1 day chart. Okay. So as you can see, these levels have already been mapped out for the most part, but I'm gonna take them off just so we can kind of, if you don't have these, then make it a little easier. All right. So when we're looking in the pre-market session, there's a couple things we need to notice. We need to notice the fact that this stock had some news. So if you're ever looking at the news, then check out CNBC in the morning, and it will give you an indication on where, what tickers are in play, what symbols are in play. I think there was some type of headline with Disney this morning, not 100% sure, but I knew something came out. So notice how the price actually gapped up. So we call this a gap. So it gapped up. So when we see stocks that gap up in the pre-market, we automatically assume that, just for instance, let's say that I was long Disney and I woke up this morning and I seen it went from $92, $91 to 101. So instantly, what I'm going to do is I'm going to sell a little bit, if not all of it, because I just made some money. So when you see stocks that's gapped up like that in the pre-market, you want to automatically assume that everybody's going to begin to start taking their profits. So what's cool about the multi-day is it kind of gives us an indication on where price action might go based on prior day's VWAP, which is the volume weighted average price. So, but let's go back to the pre-market levels. So if we wanted to create a range, let's just say, for instance, we had a gap and go, which is a rare occurrence where it gaps up and it continues to go higher. So I see a lot of people automatically assume that a stock will go higher if it gaps up in the pre-market. And that's not always the case. You want to be able to know that that's a rare occurrence. And the one way that we'll be able to define if it will continue to go is by marking off our pre-market levels. So the points of significance in the pre-market will be the high. So you can mark that off. And as you can notice, it tested that price. It came back towards VWAP. It came back up, retested again. So that's a double top. So that kind of lets us know that the sellers are more in control. They're kind of defending this price right here. They're not letting it get above that price. All right. So another significant level will be the pre-market low, which will be here. So now what that does is it creates a range. All right, creates a range for us to kind of help define our trades. So there's some other levels in here we might want to take be considerate of. You could take a look at this double top. This is where it kind of double topped out. So this price automatically becomes a point of significance. We want to look at prices where it broke out from, where it broke down from. So we could also look at, and I don't want to make this too messy, but let's look at, I say this is a nice point here where we had a retest, kind of like right here, and kind of had a lot of price action around this range right here, just up and down between VWAP and this level. So now we have our ranges. So these levels will be super important for us. This top range, this top level being super important, and this bottom range being super important. So the best time to get into this stock on a call, or if you were just buying it going long, you would want to wait for this level to be broken. You want to see this double top get at least retested, because if it retests that level of resistance and begins to break above it, then that will be a good indication that, hey, we got more buyers in here than sellers, because now we know we're above VWAP. All right, so if we're above VWAP, we know there's more buyers than sellers. We know what side of the trade to be on. If we're below VWAP, we know that there's more sellers than buyers. So now we can look at this point right here, because now we have this range, and we're looking at the pre-market lows. So now we know we're below VWAP. It breaks. Look how it kind of has a lot of price action around this level, kind of jiggles around it. So we know if we can get a break, a clean break here, then right here would be a good time to go short, because as you can see, kind of choppy around, and we could kind of pull it out to the 5-minute, kind of eliminate some of the chop. Kind of get closer in there. All right. So now we have a clean VWAP break to the downside here. Nice big candle breaking and closing below the VWAP. And then we get the price action jiggling around this level. This is the pre-market low. Remember, that's the pre-market low. And this line right here is a line that I probably had marked off on Disney for quite some time. So it's still there. And as you can see, it kind of lines up with where the multi-day VWAP is now. So, but let's go back to this. So, okay, this is the pre-market low. So notice how when it breaks the pre-market low, now would be a good time to go short, because we've clearly defined our trade. We know we're below VWAP to the downside. We know we have broken the pre-market low. So it would be the same way if we were breaking the pre-market high. Let's say we broke VWAP coming to the upside, and we started to break this pre-market high. So now we know we would begin to go long. But since we're to the downside, we can play it. And of course, our strategy is the 1-minute multi-day VWAP reversal. So we're going from blue line to orange line. So automatically, once it breaks here, we're looking for a retest of the multi-day VWAP. So we get some selling going on. We get some covering. So I wouldn't automatically assume that this will be a breakout back to the upside. I would just think that everybody that went short is starting to cover. So when you go short, you have to buy back, which means which is going to cause the stock price to move up a little bit. But notice how we still have a reason to be short. So on this first down move right here, we should have been able to get rid of some of our position. We should have been able to sell some, make sure we lock in our profits on this move right here, 98.98. So $99 got us down to 97.03. That's almost a $2 move. It's a nice profit right there. So we want to be able to lock in that profit, but we don't want to sell our entire position at one price just in case we continue to go lower. So let's say we locked the majority of our profit here. We held a runner or two, we bounced back up, and then we were able to catch the rest of that move back a little bit further down south. So now we would want to possibly sell the rest unless we were going to hold maybe one overnight if you were just feeling super bearish on that move right there. So that's one example of pre-market lows and pre-market highs. Do you guys have any questions right now before I go to another chart? Okay. No questions. All right, let's go to another. Well, let me know what you guys were looking at today. I want to know if you guys were looking at any stocks in particular, if anything you want to look at. If not, then I will move to what else was I looking at today? I was looking at boom, gap. Let me find something with a little bit more action. All right. So Soxel has, you want to look at Exxon. Let's look at Exxon. Then we'll come back to Soxel. All right, Exxon. I love Exxon. So let's take a second to actually figure out what the market is telling us as well. You know, we want to do multi-time frames. We want to look at multiple time frames and kind of listen to what the market is saying. You know, we got the 1 minute, 1 day, 15 minute, 5 day, 30 minute, 10 day, 5 minute, 5 day. So we could go out, you know, let's go out 10 days. Let's see what the market is kind of looking at on a longer time frame. So for the past week, last week, we got this kind of consolidation here. And it's kind of chopping around this price action where it'll reach down to 111. See, it never really breaks below 111. And then they come back and sell it to, you know, in the upper 114.50s. So every dip is being bought and sold, consolidating, just going side to side. So this is a range, but it's pretty big. Now we're on a longer time frame. All right, so now we know what the market is kind of telling us on Exxon. So now we have a breakout. Same way we looked at Disney, where we have a range of what I was looking at, the pre-market low. So now we're just creating ranges throughout the whole price action on a longer time frame. So now notice how we start to break down below this point right here where it broke out from. You see how it broke out from this point right here in this range, came to this range, came back to this range, and now it's breaking back down. So now we have a range break. We have a range break down here. But notice how we get back into the pattern of getting into this range. So since we don't want to speculate on what the stock could do, because, you know, it's very random, what the price might be next week, what it might be tomorrow. So we don't want to speculate, especially in these market conditions. So we just want to know that we had a range break of 107. So right now we could be potentially getting short, or they could have been finding this as a buying opportunity. Now look how bullish they were after it sold off to this 107. You had a big, massive institutional candle breaking the VWAP. That means there was a big buy order at 107. So an institution felt like this 107 was a steal for Exxon at this point in time. All right, that's a very institutional buy. You can see a lot of volume coming in right here. You can see even in the pre-market with aftermarket, this huge spike, institutional order in Exxon. But let's just go into the shorter time frame. Let's say we were looking to play Exxon today. So there was a big opportunity in Exxon to the downside on the short side. And look at this candle. It's huge. I caught this candle. I didn't catch the trade, but I seen when it happened. And it was massive opportunity to make some money just on this. And I don't know, you had to be super fast to catch that because it happened kind of quick. But see how I consolidated right here? Everybody kind of got in, had a shoot to the multi-day, and then got you higher back into this range, kind of jiggled around this range, broke below it. And you can kind of see through the lines, these lines represent ranges. You know, this is a range. You know, the multi-day between this line has created a range. But let's go to the pre-market, kind of map it out. So let's take, I can take them off. Remove, clear. Let's create a new range using the pre-market. All right. So let's go out. Let's say we wanted to trade Exxon today. And notice how Exxon has kind of gapped down, lost like, let's see. By the time the market opened, it had lost about $2 or $3 already. So that's a huge sell-off in the pre-market. To us, that's a very, very bearish move. But you knew that it wouldn't sell off for the rest of the day. I'm very bullish on Exxon and oil in particular. But let's look at the pre-market. So not a lot of action in the pre-market. So we can take note of where it broke down from. Here, this is a low. All right, so that's a range. Let's get a little closer. Let's see if we could find something else a little bit more significant. It kind of broke down from here too. Okay, big sell-off. So pre-market highs, we're gonna kind of ignore this, or we could use this one too. This is kind of important because this is where it closed out the day before. So we can kind of use this too. All right, so now we have this range. We have this range. We have here. All right. So now let's pull out the 5-minute, 5-day. Get a little bit more clarity. Take out some of the wiggle. Pull it up a little bit. All right. So now we have this range where it broke down from. And this is still important, even if we would have mapped it out in the pre-market. Because notice how it comes to retest here after it breaks down. It can't get over the VWAP. So we're automatically assuming that we need a VWAP break back to the upside. Because like I said, our strategy is 1-minute multi-day. So when stocks sell off like this, we need a break back to above the VWAP, which happened here. And now we can look for the multi-day. But it didn't happen until later in the day. So being patient, not necessarily knowing how far this could dip down. You know, we know that we got sellers in control because we're continuously selling off. We don't want to get chopped up in this move. We want to kind of be patient. So here, this point right here is the point of super significance. This lets you know to stay short because we get a retest. So now we're looking for the VWAP break, right? So we need a VWAP break. We need a break of this range. We want to get into this range because we know if we can get a candle to close above this range, then we're subject to keep going higher. Subject to keep going higher. We got to get back into this. So that's why this point right here is super significant, because we can't get over the VWAP. So VWAP lets us know what side of the trade to be on. So since we can't get over VWAP, right here is the point where we need to start shorting. So now this part right here becomes significant, because now that is the first low of the day. And now we need to break below this low of the day. But we don't want to chase this stock so far down, because we know the average true range, and we could pull that up on another chart, but let's just talk about ranges. We're already we're 107 on Exxon. We know Exxon is 114. We lost $7 on Exxon. We're looking pretty low. So we don't want to chase it to the ground and get hooked. So we can either get short at the VWAP resistance and kind of play it down from 109 down to 107. That's almost a $2 move from here to here. All right. And notice how it kind of consolidates right here. So now it's created a new range where it's just up and down, sideways. So when this kind of happens, you know there's a big move about to happen, either to the upside or the downside. So we're anticipating a VWAP break, because normally our strategy is always blue line to orange line. We have to assume that, because VWAP is algorithmic based, that we are going to retest these prices, because we're searching for fair market value now. So everybody that accumulated here as it consolidated, everybody started buying up, orders getting filled, orders getting filled. Boom. This is the move we're looking for. Because now we're breaking the first low of the day, where it broke down from, right? Broke down from here. So now we're retesting. We want to see a break of this range, either to the downside, we'll get short, because that's not to say that it won't keep going lower, or it won't go higher. So now we have this range where we can say, okay, if it breaks out of this range, I'm going to pick a position. So automatically, we know to stay short here. But since it's starting to consolidate, we want to be able to take our profits if we started to short it. And boom, this break of the range, we break above this VWAP, break above this range. So that's very bullish. That would be a good time to get in, because it's very rare that you'll see something like Exxon, that's a real company, where you'll see a big green candle like this and then just a big red candle. So from here, buyers, people that were watching Exxon, they decided to get in, you know, and notice how price action kind of just moves along this point right here, the point we already mapped out in the pre-market. That's where price kind of stayed for the rest of the day. So what price is that? Where was that in the pre-market? The price where it broke down from. Well, let me see. This is where it kind of broke down. It broke down here where it opened up. Did that make any sense? I hope that made some sense. Let me know if that made some sense. Sadiq, I think you could use your mic if you need to. I think you could cut that on.
Can you hear me?
Yeah, it was a big echo. Yeah. Wow. All right. Let's see. Let's see. All right, let's see if your mic works this time. See if we can get you on board. All right. Well, did that help at all? Did that kind of help a little bit, Sadiq? Rocking and rolling, rocking and rolling. Sadiq, can you hear me? I guess you could type in the chat. If your microphone is echoing, then you could probably type in the chat for me and let me know. All right. Well, let's do one more, and then we will adjourn this meeting. All right, let's do one more. Let's do one more. Let's see. Let's do pick another one. All right, I'll pick one. Let's do let's do Soxel. That's what I want to do. All right, Soxel. Soxel's been in play. It's very liquid, a lot of volume. So let's keep this one on the watch list. So as we see here, look at this. Look at all this price action. This is kind of hard though. This is a hard trade. I don't know if I want to do Soxel. Yeah, something like this you might want to stay away from for the most part. If it's real choppy like this, might want to stay away from this one. Reason being, a gap down. So the only point of significance, since we look for blue line to orange line, the only reason we want to get into this is if we can break this. If we could break that right there, we'll be in. Yeah, so we would have wanted to stay away from this one. But if we were pre-marketing using pre-market to actually look at something like this, then we would definitely want to map out that high, this low. All right. We want to take a look at this. That would create a new range for us. But since we couldn't get over this point right here, there's no reason to get in to the upside because we're looking for blue line to orange line at all times, especially when stocks gap down, right? When they gap down, that's when this works the best. A lot of volume. So this just became a chop fest. Not to say that tomorrow it can't explode because it looks like it's just consolidating here. So tomorrow I'll be looking for this to actually make a nice move. I think it would make a nice move tomorrow. Let's do real quick. Let me get some a little action. Little action. So Rivian was a nice short today. Beautiful, beautiful short. All right, Coinbase. The gap and crap, so to speak. So if we was looking at Coinbase, let's say we were watching Coinbase. So of course, multi-day is up here. The small gap kind of feels it. But if we were looking at this pre-market, of course, we want to pre-market low, pre-market high. We want to look at these ranges. All right, so now we've created a range. 1, 2. So what does it do? What does it do from here? We get a break. We're above VWAP. Can't really get back above this. And the average true range for Coinbase is pretty high. It moves, gives a nice move throughout the day. So 44 got to a low of 40, maybe $4. So here, the VWAP break, right, to the downside. Can't break above this. Why is that there? Pre-market levels. All right, we don't want to get in unless we start to get past some of these ranges first. We got to break some barriers. We got to kick some doors in. We got to make sure that we are getting into the right movement. You know, we don't want to get faked out. So VWAP break to the downside, big candle. All right, VWAP retest. So we go short, we want to start covering here. This range becomes important for so many different reasons. Notice how it retests this level several different times. That's why it's very important to do your levels in the pre-market. These prices become super important. All right, so VWAP to the downside, we get a reason to stay short here. Probably sold some into the move. Got a break around 43, got you down to 42.06. Got a retest. We're not selling all our position at once, so we're getting out. Especially if you're doing options, you want to be right. You need to be right now. So we want to lock in profits, right? Get a retest, giving us a reason to stay short. All right, so we made a good decision. Starts to pivot back. So we want to participate in this move to the downside. We want to make sure we're getting rid of everything as much as we possibly can and lock in our profits. You know, we never know if it probably keep going a little lower. You probably want to hold on to one. By the time it gets down to here, you should have only about one contract left. You shouldn't have the entire position you put on. when it starts to actually move. That one last one is the one you'll probably see an extra uh couple 100% if it gets to that point, but you most likely won't be hitting a home run like that with the entire position on, because you want to make sure you lock in profits just in case something like Exxon happens and you get a big green candle that just melts your face to the upside, just crushes, and you just lose the whole game. So that's why you just selling positions into the move, making sure you lock in that profit. And you just holding. By the time you get here, you shouldn't have much of anything left. um, so just be advised. Hopefully this kind of helped you. um, just be able to map out your levels, right? Pre-market levels. Want to look at the pre-market highs, pre-market lows, and kind of figure out where it broke down from, or where it broke, where it broke out from. So kind of broke down from here, broke out from here. So this is kind of close. So we're just going to keep this range kind of tight. We don't want to make it too messy. We just want to make sure we could create a range. And so we know where we need to, price action. We get in, we get out. We want to make money from here to here. And the VWAP lets us know what side of the trade to be on. So if we were short and this thing would have got back over the VWAP, there's no reason to stay short, especially if it would have broke this, then we automatically know that it's probably going to go up and retest that multi-day. So yeah, hopefully that helped. Any questions? You could try to hop back on the mic and see if it works, or let me know in the chat. All right, my main man. Well, I'll see you in the morning. I'll be up bright and early. I'm signing off. Hope everybody enjoyed this video. All right, you want to go over PANW. Let's go over PANW. Let's do that. Let's look at Foot Locker. PANW and Foot Locker. Let's do that real quick. So Foot Locker. All right. So these levels have been mapped out for Foot Locker already. Notice how I looked at the pre-market high on Friday. Is that Friday? What's today? Yeah, Friday. Okay, so this is Friday's pre-market high. All right, I mapped that out. All right, I got this low where it kind of broke back out from. I mapped that. All right. So that's most important. We're going to create that range right here. This right here is where it broke down from. So now we have a range. So it gapped up. So what happens when stocks gap up? We're looking to play the fade. Because if you were long Foot Locker and you woke up and it went from $32 to $41, you're going to sell a little bit, right? You're going to sell something. And then we're looking for the multi-day. So you want to be able to break your range. When it breaks here, perfect time to go short. So you don't get caught up you give the stock some time to let you know what it wants to do. Does it want to go higher? Does it want to break these levels right here? Not yet. So now it breaks this level, pre-market. takes you down. Multi-day. Now we're looking for the multi-day, right? Gives us a reason to stay short. Reason to stay short. So we want to participate in the move. Take it on down. Take it on down. Same thing. What's that today? Not really too much action in Foot Locker in the pre-market today. It's kind of, so all you could really play was, if you did want to, you could line it up. You got a break here, pre-market high. These levels are still here from Friday, so I could play that range. Break pre-market highs, VWAP break pre-market highs, you get in, and notice where it comes back to. The same levels you mapped out last week. So these levels are important, right? That's why it's still on the radar, still on my map. Becomes a treasure map. All right, PANW, a lot of chop. This was real choppy. If we go back to Friday, had a gradual move. So we start to look for these pre-market, these lows right here, where it kind of retests, revisited. Points of interest where it retested high. So at the open, it was real choppy. It's real choppy. That's why I said it was a hard trade throughout the day. You could have made some money on that move, but to the upside and the downside, but you had to be super quick. I'd be super quick on the VWAP break, break VWAP, boom, get in. Can't get over this right here. So it's a reason to stay short, right? Can't get over that. To the downside, could have made something to the downside, had to be quick. But this level right here, I think it was the more defined trade, the easier, because now you got to retest here. You kind of see the wicks too. Wicks retest, candle retest, and then this line right here is super important. We could trace that back to, I guess, this pre-market action right here. So throughout the day, it kind of just retested that price, bounced, couldn't really close, but once it broke below that, that was really the defined move where you could have got 168, got you down to 166. The easier move, or you could have got in here and kind of just played it down, but it's super choppy, so you could get chopped up easy. If you don't have your keys, set where you could just hit the button, be in and out that fast, and have your stop set. That's why, the Weeble would be super, super beneficial. Here today, let's erase it. So if we came in today on PANW, just pre-market, we want to check. We got a say this was the low. And it's kind of illiquid here. This is kind of surprising. But here, we got a big, huge candle. So the only thing that makes sense here is looking at the pre-market high. VWAP break, big green candle breaking VWAP. Got a retest here. This was your reason to get in. This candle breaking above that pre-market high. So golly, that was a big move. 167 would have got you 173. You would have been selling into the move. Probably got rid of the last one once you start to get your average true range. So if we look at that level, we pretty much broken past anything we would have had mapped out for Fridays. So those ranges would have still been in play as points of target. You know, we want to be able to take profits at some point, right? So boom, you know, getting out is just as important as when you get in. So of course those levels were still on here before I erased them. So it would have gave me a roadmap. But this reason right here, when it broke that pre-market high, was the reason to get in, clearly. You see? This candle here, VWAP break. This was really your point to get in, this huge candle breaking VWAP. Just the reason to stay in when it couldn't break down below the VWAP. Man, it was a massive move. Man, that was a massive move. Wow. So here you go, pre-market on the 1 minute, kind of sold off. So you had a dip and rip, VWAP break, retest. So this would have really been your point to stay in because you got a lot of buyers coming in. You can see the buyers coming in. So the buyers take profits. So here, once it starts to lift off again, you know, and then you get a retrace, doesn't come all the way back to VWAP, you know it's about to take off. And then you're automatically assuming VWAP break blue line, the orange line on the 1 minute, right? Retest. That's where it comes. Just look, notice how exactly to the multi-day. That's where it comes to. It retraces. Look at the deviation band. Deviation band holds it up. Takes off again, breaks back above. Multi-day. Clear breakout. Man. Golly, that's a big move. Man, I think that was a move of the day right there. Man. That was hefty. That was hefty. All it is to it. When you're mapping your pre-market levels out, you just want to look at pre-market highs, pre-market lows. You want to look for retests. You want to look for breaks of those ranges and use your VWAP, your multi-day, as your guiding light as where stocks should go. You know, even if you go the wrong direction initially, you know, it's okay to be wrong. Just don't stay wrong. So if you find yourself going short or you're going long and it breaks back over the VWAP, get out, give yourself a chance to go into the other direction. You know, make that money back that you probably did lose. And then, you know, now you're on the right side of the trade, you know. So it's okay to be wrong. Just, you know, just don't stay wrong. Well, but yeah, we definitely gonna wrap this session up, Sadiq. I'll see you in the morning. I'm gonna close out. Um, enjoy the rest of your evening, my brother. Thank you for being on. Really wanted to put this together for you specifically, and I hope it helps. So I'm gonna close out.